Today we're going to talk about how to get more deals done safer and more profitably. And I have with me today Michael Hill. Welcome, Michael.
Hey, thank you. Appreciate that, Tom.
You bet. So let's start out. Tell me, what do you think, what in your experience, what is the most important thing to be able to get safer deals, get more deals, and make them more profitable?
The principal thing about making a deal profitable is understanding the exits first. Strategizing the deal, getting the numbers, putting them into play. But if you don't have an exit that works for your purpose, then walk away. Mm-hmm. Second is, how do I reach that exit? What's the best strategy to use to make that exit work for me? And if that strategy ends up not working, then what's my plan B?
Okay, and so what I'm hearing with that is it's about structuring the deal, understanding the process all the way through to the end so that you have that exit in mind.
Yeah, if you don't have the exit when you buy it, then don't buy it. Mm-hmm. There's no what ifs or I think I'm going to do this, or I this would look good if it looked this way. But understanding that deal works with this exit. And then what is the information that I have to gather to make sure that exit does work, and how do I fit my strategy to that piece of property?
Okay, so let's back up a little bit. Let's get some context around the discussion here. So you are an expert in understanding and structuring real estate deals, business deals. You're in Sunnyvale, is that right?
Yeah, yeah. Our company's in Sunnyvale, California.
Okay, and you're with Advantage Systems and Eagle Property Partners?
Yes, I've been with Eagle Property Partners since 2010.
Okay.
I'm the business developer there. And just recently, in the past couple of years, we went into the Advantage Systems, which is a new company that we're managing. And we also have we manage and oversee about 11 different companies.
Okay. And what types of companies and how would they relate for our listeners who are, I would say a majority of our listeners are real estate focused?
Well, believe it or not, I started my first business in 1983, and that was a general contractor's business. And I've been in the construction business since that point in time. In 2004, I went into the real estate investment market simply because I knew that as a GC, I wasn't able to get the business in a position that I was looking for, which is independent. So what we did was we started doing real estate investment, and in 2004, I did a couple flips here in Willow Glen, and we purchased some properties out in Arizona for rent and holds. And then we went into property development because that was my expertise, was construction and development projects. And so from that point on, I've basically been in real estate, and I'm pretty much know about as much as anybody, as much as the next guy does about investing in real estate. So that's my primary basis of business.
Got it. And with that, whether it was with business or real estate, from our discussions before this call, you are really an expert in structuring deals in a way that keeps them safer and more profitable. With that in mind, what are some of the things that you've seen that either you wish other people would know, or that you feel is important for our listeners to understand before they get into a project too deep, whether they're active or passive in the project, whether they're just putting money in, or if they're actually swinging the hammer, so to speak?
Well, the first thing is always protect yourself. And I see so many people that aren't even getting close to that idea of protecting what they have, what they own. And they walk into deals without any kind of protection. And if that deal happens to go south, or if there's somebody that gets positioned in in a litigation issue, they have the capability of losing everything that they own. So my main purpose in putting together a system is to make sure that that when people do invest, that they invest correctly, that doesn't expose themselves to risk or unnecessary risk, I should say. So that's one of the primary things.
And that's it, whether it's legal challenges that might come up, or are you referring to even things like budgets for construction and on-site safety, or what scope are you referring to here?
This goes across all scopes. Recently, I had an individual that lent some money to a project as a JV where the construction company misused the funds. And so the company that lent the money is actually suing both the broker and the contractor for the lost funds, and also for misappropriation, and also for foreclosure. So that means that everybody that was tied to that piece of property as far as funding goes, they're now at risk of having frozen assets, and also at losing all their assets that they own if they didn't put that money in there in the proper form. Another person has probably 12 to 15 properties, and that person owns all their properties in their personal name. So if there was a lawsuit that came against one of the properties, every single property is at risk. So they don't have any liability protection across any of their properties. Another JV. In fact, it's incredible to understand that almost 60% of joint ventures end up in a lawsuit.
Wow.
So if I was to say for someone to understand their risk that they're taking, and to mitigate that risk, that they first position themselves to make sure they're mitigating that risk.
Okay, so let's break that down a little bit. Segmenting the risk is what I'll say. I don't know if that's exactly right, but as far as having multiple properties, not having them all in one entity, separating the liability on each one, I believe is one of the areas you were referring to. Is that correct?
Correct. So understanding why lawsuits occur in the first place is half the problem, or half the solution, I should say. Most people sue because they want to gain access to capital. They're suing for money. So if a person was to own a lot of assets, let's say they own 6 properties. 3 of those properties were high equity properties, and 3 of those properties were fully collateralized. The 3 that
meaning that there wasn't a lot of additional equity in them other than the liability.
Correct. So they had 3 of the properties mortgaged 95%.
Yeah.
Those 3 properties could be mitigated on the lawsuit because they have there's no value to them for somebody to sue, because there's no cash available to them. So those 3 properties could be held by the same LLC or limited partnership. However, if the 3 high equity properties, you would want each one of those in its own entity, separated into each one would have its own LLC. That way, if something happened on the inside of one of the LLCs, it wouldn't reach out to the rest of the properties.
Yeah, that makes a lot of sense. And then the other area that you referred to was as it relates to as money put in escrow or money not put in escrow for construction reserves or construction funding. I know I've heard horror stories where investors will give the contractor or the borrower all of the cash with the trust that it will just be spent exactly how it was planned. And you and I both know how detrimental that can be to a project, because things don't always go as planned. And so could you just describe the process that you recommend, and I'm sure it's really close to what we do as well, but the process as it relates to controlling the funds and keeping the project safe, so that nobody inadvertently or purposely walks away with too much cash?
Well, number one issue that most people don't understand or don't put into play is a budget. So the budget should be put in play that says, okay, at this point in time, we're having spent this much money, which requires the construction be broken out into different categories of construction, whether it's concrete, foundation, carpentry. They need to be all broken out to those particular industry allocations. Then after the budget is understood and put in place, then what usually happens is that the hard collateral or hard money lender will actually say, okay, we got your budget. When you get to this point on your budget, then I'll release some funds for you. And that's a great thing to control a lot of the money that gets expensed out. But a lot of times the contractor will take the check and not pay the subcontractors.
Mm-hmm.
So there's no guarantee that that actually works. And I'm sure that you've run across several different times when the people did just that. They took the check and they went and paid their mortgage instead of paying the subcontractor his money.
Yeah, and there definitely are ways to control that as long as
Yes.
those are put in place. And I think that's what you're referring to, is really ensuring that the right systems and processes are set up ahead of time.
Correct.
Before the money is even put into the project, much less before it's released, right?
You're right. And so a lot of times we'll have third-party management companies come in and manage the funds, and they'll distribute the checks out of that third-party management fund. And it could be in an escrow, or it could be an escrow account that's charged to that management company. But we know that those funds, once they disperse, that they're going to get to the allocated receiver of those funds, and there won't be any question about it. And we always pay after the fact that after the construction portion has been completed. So even if it's not a 30-day billing, we only pay according to the percentage of construction that's been completed.
Yeah, and with inspections to verify that it's completed, lots of photographs, lots of detail showing that the work in fact has been completed, not that it's just on hearsay or on trust that it has been done.
Yes, that's absolutely correct. And a lot of times we'll tie it into the city inspector. We'll say once the framing is done and it's signed off, then we'll pay you a certain percentage of the funds for the carpentry. Or once the roof is done and it's signed off by the city inspector, we'll use the city as the inspection tool. But that all depends on how those funds are allocated and how they're dispersed, whether it's based on the amount of work completed over the actual job description, or whether it's on a 30-day basis of what work's been done in that 30 days.
Okay, so could you describe John or Jane Doe come knock on your door and they say, Michael, can you help me put together, I've got a really good real estate deal. I have somebody that's interested in putting money into the deal. Can you help me facilitate this? What would that process look like? How would you walk them through it? What services would you provide, or what? And even more so, what do you recommend as the process so that things don't go sideways?
So there's my process starts with analytics. I want to know what the property costs, what it's going to retail at, and what it's going to what the number of but the actual budget for the improvements that are going to go on the property. And I have to make sure that that number that comes off the profit side is the number that I'm looking for when I go into a project. Our company looks for 25% minimums. So that means
25%
that gross profit.
Yeah.
Okay. We don't do anything less than 25% gross profit.
And can you just identify, as long as we're on it, what gross profit is? That's before real estate sales commission, reselling. Identify what you mean specifically for gross profit.
So gross profit is all the costs before we pay the sales costs. Mm-hmm. And the sales cost is going to be whatever goes into escrow for that cost of sales. And usually that's we negotiate it down always. So our cost can range from 4% to 9%.
Got it. And that's one of the services you provide, is the selling of properties?
We don't. I mean, On all of our projects, we sell by owner.
Mm-hmm.
We don't particularly hire individuals to go out and sell the property. So we'll pay a 3% or 2% commission on the buyer side.
Mm-hmm.
But we generally have all our properties, and it's been a long time since I've done a residential project. Almost all of our stuff is commercial. So when we walk in, we know who's buying it before 30 days is expired on the walk in. So we
Okay.
know exactly who we're. Most of the time, we'll have 5 or 7 people that are arranged for the exit before we ever buy.
Mm-hmm. So recently, you and I spoke about a project that I had come across my desk. It was something that was a bit out of our wheelhouse, but we had people, customers, clients that wanted to get some more information. I wanted to be able to support them, help them get through the process, and that was a small trucking company here in Stockton, California. And when I shared it with you, you took me through a process, a discussion of what the business was about. And again, my expertise is real estate. I know a bit about business, but I'm a lot more familiar with everything to do with real estate than I am business itself. And so I called you to see how you might be able to support us. We went through a process. Could you just briefly describe that and then share how that ties in with our listeners who are real estate investors who might be interested in also walking through that process?
I will give that a shot. Number one is we do a lot of analytics on every project that we walk into. I've been in construction and real estate since I was 12 years old, so that comes second nature to me. What I didn't understand for 45 years was how to do business. And because of that, I lost a tremendous amount of money I spent a lot of money. I paid a lot of money that I didn't really have to pay. In 2004, I found out what exactly it was that was necessary to understand business as opposed to just being in business. So one of the things that we learned is that rich people do things differently. They do exactly the same things that everybody else does. There's no difference in what they do, except for that they do it differently. So, and I shouldn't say rich people, I said wealthy people. There's a difference. But number one is the one thing that we have to understand about business is that we have to be analytical about it. What does that business do? What is that business pros? What is that business cons? How much growth is future predicted for that business? What does it exist today? What was it 10 years ago or even 5 years ago? And then how does that relationship between its past work to maintain that future business growth? And when we walk into a business, we must understand exactly what that business is about, the legalities of that business, the projections of that business, and what that business's future is and how it relates to its customer base. And there's a lot more that we have to understand and discover about that business. I do investments in businesses that I know are disruptive. So we do a lot of investment in energies.
Can you give a description or explain what you mean by disruptive?
Cool. Yes, that's probably. So we know that there's a lot of businesses out there that are started every day. Some like 470,000 businesses started every month. There's 26 million businesses out there. Of that 26 million, 22 million of those businesses are single people business, single person entrepreneurs, husband and wife, or as far as single people go, but they're all single person businesses. The fact that these people have these ideas is fantastic, but a lot of the ideas relate to each other and they're equal to each other. So if I have 10 people that want to start let's say I have 10 people that want to start a gym, and they all have the same business plan, and they're going to start the gym the way everybody else has started a gym prior to that. So that's equal to those business practices. What I'm looking for is someone that can be disruptive out of that. The person that comes in and says, I'm going to start a gym, but instead of starting a gym like everybody else does, I'm going to start it on the 17th floor of a high-rise building, and it's also going to have a low carb, some kind of restaurant that's attached to it that feeds the people once they're done working out. And also this gym is going to have a balcony or a pool that reaches out above the other one. That's different than everybody else's business plan. I'm not saying that works every time, but that's a disruptive point in that industry. And that's what we're looking for. We're looking at somebody that can walk into a business and say, I have the same business as 400,000 other people, but this is my difference. And it's going to be impacting, all of my customers, not just 4 of them.
So maybe a big an example on a big scale would be Uber or Lyft, something like that, where they were totally disruptive to the transporting people business, where it used to always be taxis, and it certainly isn't that way anymore.
Uber disrupted the taxi business. Airbnb disrupted the hotel market. There's a new market coming out, and it's called the CBD market and the marijuana market. And these guys are going to be rubber stamp businesses. So in order for them to separate themselves from rubber stamps, they have to do something that's disruptive. And so that's their task, is what is it that I can build in this business that's going to be different, so different that everybody wants my product over everybody else's.
Got it. Okay. And so you walk people through that process, just really understanding all the details of a business, help them analyze it, help them pull the numbers together. You have a team that will work with you from a tax perspective, from legal and accounting perspective. At least that's my experience with the trucking company discussions that we've had. And so I think those are all services that you bring to the table, almost a la carte, if I'm understanding correctly.
We have the company, The Advantage. Basically, we have all of your startup attorneys. We have all your tax attorneys. We have all your CPAs and bookkeepers. We have all of your marketing groups. We have all of your business development, all your SEO, all your internet marketing companies. These are all part of our package. When you come to us to look to start a new business, these are all people that you're going to have at your disposal. And they're the ones that are going to be starting your business. I'm the one that's going to teach you how to start your business. These guys are going to be the ones that actually do that work. And that's why it's important to me that people understand this, because this is the way the wealthy people do it.
Got it. One of the things that you've shared that you do, and that it's what you call project recovery. Can you give a brief description of project recovery and how that might tie in for our listeners?
So one of the biggest challenges for a lot of construction companies for the past 40 years is that they cut corners. They'll do estimates on construction jobs based on a glance over of the plans. When they do this and they don't read certain specifications that are within that set of plans, they'll leave themselves open to the wrong numbers. And there's probably, I would say 80% of the contractors in this market do exactly this. They'll bid the job according to the plans that they get, but they don't read the specifications. So the plans call for 40 doors. They'll budget them for 40 hollow metals at $100 a piece, when the specifications say that these are welded steel doors that are fireproof at $1,000 a piece. So when they go to do the job, they are right immediately they're $40,000 over budget. So what they do is they hire me, because I'm the guy that reads the specs, and for every spec that they miss, there's one that's there for their advantage. So I'm the guy that comes in and can balance their profit margin simply because I know all the specifications and I know how to apply them in specific cases so that they can come out of the project with a small profit instead of 40 or 50% over budget.
Yeah.
It's out of their
Yeah.
pocket.
Got it. So in an ideal world, they would work with you or someone like you where you take the time ahead of time to really read the plans and specs so that you can take advantage of the areas where there is a little bit more room, and also be sure you're covered on areas, like you said, where the specs call for something higher than you thought it might call for.
And that's a double-edged sword right now, because if you're bidding against if you're a small GC and you're bidding against one of the conglomerates, they have products at a huge discount compared to a small company. So it was my experience that if I went in and I bid the project according to what was required on the plans and the specifications, I would never get a contract because my numbers would be so much higher than everybody else's. And at the point in time when we were doing it, the project was always awarded to the person with the lowest bid. There wasn't any variables in that. So whoever got the lowest bid got the project. Of course, the big guys, they do it on purpose because they know exactly what I knew, which is I know how to recover my costs through learning the specifications. So I know when I margin this cost out, I know I'll recover 3 times more than that in this other thing that's in the specs, because it's going to be a change order that they didn't. We know this doesn't work. So in order to make that work, we have to have a change order, and we will increase our costs. We actually increase our revenues according to that change order, and so we recover a whole lot more money than what we're losing on as far as bidding at small.
Yeah, and I think the real message here is that if we can take the time ahead of time to really look at the detail, to do the work that's needed to really understand the project before we ever get into it, and know the details of the types of doors, the types of windows, the specifications on the entire project, so that it meets code, so it meets specs, plans and specs, whatever the situation might be. I can't tell you how often I've shared this with borrowers and developers that in the beginning they're so excited about a project that they just want to get going and get the ball rolling and get on it. And we work really hard to pull them back and say, take the time, even if you're going to sit in front of your desk going through the details of a deal for 30, 40 hours ahead of time versus being on a job 3 or 4 months longer, being over budget by 20, 30, 40%, all of those different things. Yeah, it's kind of a drag sitting there in front of the computer and doing all these details, but think of everything that's saved down the line, the headaches that are saved, the potential lawsuits that are saved for doing this work ahead of time. And it really makes the project run so much smoother if everything is done up front, if everything is really taken care of. And I always talk about the checklist to really be able to understand where you're going, what you're doing on projects. It is to create good, solid checklists that you can review every single time you're bidding a job, every single time you're looking at a job. Take that checklist. I know for our company, we've got over 700 items on our checklist. And if we don't go through that, there's a chance that something can be missed. And it's so quick after you have the list built, it can be done very quickly. And it saved many, many thousands of dollars in many occasions. So
it's number one is we make our money when we buy the property. And the only way we can do that is to know the exit strategy when we buy. So in order to know the exit strategy, we have to know every single detail.
Yeah.
And 90% of the people that walk into real estate investment clubs, to real estate gurus, and it's higher than that, but 90% of them don't even understand the deal as it sits on a basic number system, let alone understanding the details that it takes to put that business in that particular project in play.
Yeah.
And that's a crying shame. I mean, that's why so many people are losing money today, is because they just don't know the details and they don't know the exit strategy before they buy the property.
Yeah. And that's where do risks come from? They come from the unknown. If you know everything about a project, you can either mitigate the risk, eliminate it, or you can't. If you can't, you walk away from the project. If you can mitigate it adequately, then you may be able to move forward. Or if you can eliminate it, that's by far the best. But until you uncover and really understand and know what those issues are, you can't really do anything about it. So the unknown is the biggest enemy, I think, in any sort of investment strategy, right?
Absolutely.
Yeah.
My job as an investor, when people ask me what I do, I say I mitigate risk. That's my whole job. And that's exactly what I do. And in order to do that, I have to have every single detail that I can think of, and I have to have the details that I can't think of. In order to find those details, I have to research every single deal. When it comes to real estate, I'm pretty well knowledgeable about what it takes to do a project. I know the cost, I know the labor, I know the hours, I know the overhead, I know what the deal costs, I know what the hard money costs are. So I'm pretty confident and comfortable in that area. When I first started reaching out to other businesses, there was so much that I had to understand about each different business. And that was the toughest job for me. It's the easiest one for me to do because I love research.
Yeah.
But it was the toughest one for me to actually go out and perform for the benefit of that business purchase or that business design or analytics, or because we do a lot of consultations for people that want to grow and scale their business. So in order to do that, I have to find the numbers that make sense that they have no clue about.
Yeah. And so if somebody wants to reach out to you, how would they get a hold of you, Michael?
Well, they can always get a hold of me through my email, which is michaelhill@eppca.com. I don't give out my phone number, but
they can reach you at that.
At the email is the best way to reach me. The email, and then you can always check out my website as businessadvantagesystems.com, and that will give you an indication of what we do as a business developer to help people understand startups and what it takes to grow their company into a position of wealth building.
Great. Thank you. I want to ask you a question, just don't mean to throw you off here, but if you were to suggest a book or a resource or something that has been really helpful to you, whether it relates directly to real estate, directly to investing, or something else, what comes to mind? What is a resource that you think our listeners would really benefit from?
You know, I have several different resources that I use. One of the resources is what they don't teach you in Harvard Business School. I don't remember the author right off the top of my head, but that was one of the books that opened my eyes about what they do teach people in college to be a business major. And when you read this thing, you're going to be surprised. They actually teach. I'm not going to go into it. I think that's a good book for someone to really read. Of course, Rich Dad, Poor Dad, and the Cash Flow Quadrant, and understanding your position and where you are. If you're just starting out, those are great books. If you've been in business for a while, there's some other reads. The one I like is IX. I'm sorry, I would have been more prepared. I forgot about that.
Yeah, no, and I think
those are three books that I would recommend.
Yeah, those three are great, and thank you for sharing those. We're going to wrap it up here. What's one thing you really would like our listeners to walk away with, or to know, or you wish that you wish that you had known when you started? Just some good, valuable piece of information.
Wow. The most valuable is that you can do anything you put your mind to.
Mm-hmm.
That there's no limitations, that there's no lack of opportunity. That's one of the things I like people to understand. There's never a lack of opportunity. You just have to be open to receiving those opportunities as they come along. One of the other books is The Science of Getting Rich by Wallace Wattles. I think that's a great book for people to understand that the place they have in humanity, and how a paradigm shift can change how they perceive everything around them.
Great. Well, thank you very much for sharing, Michael, and look forward to talking again soon.
Thank you, Tom. I appreciate the time. Hope you have a wonderful day.